Today's guest started out flipping houses, but realized true financial freedom comes from long-term holds. Now he's moved beyond just flipping and is building generational wealth through strategic buy and hold investing. I'm Kathy Fedke, and welcome to the Real Wealth Show.
You're listening to The Real Wealth Show with Kathy Fedke, the real estate investor's resource.
Today's guest is Brandon Rickman. He went from flipping 100 properties per year to holding properties. Today, we'll learn about his journey in real estate and what he currently is seeing in the market as an active investor. Brandon, welcome to the Real Wealth Show.
Thank you very much. I'm excited to be on with you guys today.
Well, we love a good success story. It's so inspiring. So let's start with yours. How did you get started?
Oh, goodness. So my father was actually in real estate. He was a builder and a developer. So my brother and I both came up learning the old school way. So he taught us how to dig footings and pour concrete, roof houses, hang sheetrock, all that. And then my wife is actually a real estate agent. So after we got married, after college, we both had full-time day jobs. She was a math teacher at a high school, and I was working for another builder. And then we decided we wanted to try to do something to earn a little extra money. So we decided to buy a house and try to flip it and see how that went. That's where it all started 23 years ago now.
Oh, you're so lucky to have those foundations. So many of us don't really know what we're looking at when we walk through an older home, or how to build a new one. So really wonderful that you were able to put those skills together and start your business. So what are some of the early lessons you learned?
I think the first lesson we learned is don't try to do all the work yourself. Because I had a background in doing the work and knowing how to do construction, our first flip that we did, we actually did the work. And my wife will still tell you to this day that she never wants to lay tile again. We laid tile in the bathrooms and the showers everywhere. And it probably ended up costing us more money and taking more time than it would have if we'd have just hired professionals, because they have the right tools. They do it every day. They have the knowledge. And we didn't. So we were trying to save money, but in reality, I think it probably cost us more than it would have if we'd have hired professionals. So now that's all we do.
Yeah.
We hire other contractors to do the work. We manage them and they do a great job.
We are guilty of that too. I think it took Rich a week to put in a floor on our first flip, and his back was hurting, and it could have been a lot easier to hire it out. But in the beginning, you don't really have the money to do that.
One of the things that we learned is to obviously build that into the budget. So I had a background in construction. Mm-hmm. The other thing that I would do when we first started off is I would hire the contractor, bring a contractor in and have them quote what the rehab costs. I would tell them, this is what we want to do. My wife would tell them, the colors, selections, all that kind of stuff. And then we get a quote from them up front. So we would build that into our budget to know this is how much it's going to cost, add 10% overage to that. And then, we'll just plan it into the budget. If it doesn't work, we move on to the next property.
Yeah. And of course, I think most people would love to be able to hire out, but it is a question of money. So how did you come up with the money for your first one?
So our first flip was kind of do it out of our pocket, save up money, try to figure it out. Can we go get a bank loan? How much do we have to put down? How much of our own money do we have to put into it? And let's just, kind of bootstrap it from there. And then obviously it was never our vision to build a big real estate company. We just said, how can we make a little extra money to do some of the things we want to do? And we were doing maybe a house or two a year at that time. Eventually we built up to where we were doing 100 houses a year.
Wow.
And it became more than full time. We obviously learned over time better ways to finance our properties, working with other investors and working with hard money lenders and private lenders. And so that's how we really scaled, was by working with other lenders and partnering with them, growing our marketing, outbound marketing, and finding more deals.
So if somebody were to find a great deal and could find someone or had the skills to be able to estimate the cost of renovation, is it still possible to borrow enough money to cover acquisition and renovation?
It is. Most of the time, that comes through private lending. What I've found, there are some hard money lenders who will get close. Our best hard money lenders right now are doing 95% of purchase and rehab. So we have to put 5% in. But I kind of break out the lending in three buckets. One is institutional lending, which is like banks, mortgage brokers, lower interest rate, much harder to get. Number two is hard money lenders, higher interest rate, easier to get. And then third is private lenders, the most flexible, It's friends and family, people you know. Those are the ones that we have who are willing to give us 100% of the purchase and rehab because they know us, they trust us, they know we've been in business for 24 years, and they know we're going to pay back the loan. So much more flexible. They'll wire the money for the closing, for the purchase and the rehab, and then we have those funds in our account to do the actual rehab. So those are definitely the best option when it comes to funding the property.
Yeah, it's when you're starting out, it's hard to have people believe in you, right? If you don't maybe believe in yourself yet, you don't have the experience. So in that case, where do people go if they're starting out to get the financing?
Yeah, so I tell people take imperfect action. I use a silly analogy. If you're going to drive from New York to San Francisco and you said, well, we're going to wait until you have everything figured out, you've got traffic figured out, you've got all the stoplights figured out, it's going to be a perfect drive. You'll never leave. It'll never happen. So you take imperfect action. You start, we're going to hit some bumps along the way. We're going to hit some traffic. We're going to hit some red lights, but just start taking action. And, there's a lot of information about flipping houses, certainly online. There's a lot of podcasts and a lot of information out there about it. But I really think I tell everybody that we work with, all of our clients that we work with, I want you to call 5 real estate agents a day for the next 4 weeks. Tell them you're an investor, you're looking to start flipping houses. If they know of any property that might be available that needs some work, please let you know. And so it doesn't cost anything, just takes a little bit of your time each day. And then if you find a property that you can get under contract at a good price, the funding part is not as hard as it sounds. The funding part is easy. There's money there for people who have a good deal. So really getting the deal, finding the property is the hardest part of the process. If you find a good property, there are people who will fund it.
Yeah, that's great news. That's what I really wanted our audience to hear, is that the money will come if you find the great deal. But finding the great deal can be the challenge. So what do you consider a great deal? How much under market do you think it needs to be?
We buy in really good markets, we buy 80% below ARV, after repair value. Less rehab. In lesser markets, we do 70. So 70 to 80% of after repair value minus rehab. So we'll go in, look at comps in the area, figure out what we can sell it for once it's completely rehabbed. And then we're going to figure out what our rehab cost is going to be. And then we're just going to do the quick, easy math. It's 80% of that after repair value minus the rehab cost. And that's what our offer is.
That's simple. That's great.
Yeah.
And how, these are big and hard questions, but how do you know the ARV? And for our audience who doesn't know what that is, it's after repair value.
Yeah, so we pull comps, comparable sold properties. So I'm looking first in a 1/4 mile radius, and I want to find like kind properties. So I want to find properties that have the same bedroom, same bath, same square foot generally as the one we're looking to sell. And if it's already sold and it was completely rehab, that's a good comp. And I want to find 2 or 3 of those that support the value before I determine what the ARV is going to be. A lot of times we'll have people who, they'll go 3 or 4 miles away to try to find a comp. And I don't think that's a good comp. I want something close by, something in the same neighborhood. Or they'll use, our house is a 3-bedroom, 2-bath, and they're going to use a comp that's a 6-bedroom, 5-bath that was built last year. That's not a good comp. You want to find like kind properties that same baths, bedroom and bath count, same square footage if you can.
So most of our audience is buy and hold investors, busy professionals who already have a job. They just also want to be investing in real estate, so they buy for rentals. You were flipping 100 houses a year. Do you look back and wish you had held some of those instead of sold them?
I wish I had held every single house that I had ever bought. And I've talked to a lot of we're in some mastermind groups with other flippers all over the country. Everybody has the same response. I wish I had kept every house that I'd ever rehabbed, ever sold. I wish I'd kept all of them.
And looking back, how do you think you could have been able to do that? Because obviously people are flipping houses to get the profit to go do more. So, what would you tell your younger self, as a way to keep those properties?
I think the best thing, and we did this some when we were first starting off, but as we grew, we started flipping more because that's where the income was coming from. The more money we were making was from the flipping. When you have a rental house, and we've had a lot of single family rental houses and short-term rentals, long-term and short-term over the years. And, we might make $100, $200, $300 a month on those until they were paid off. And then obviously they made a lot more money. But when you would flip a house and make $40, $50, $70, $100,000, we kind of got focused on that. But I think what we did early on that we should have stuck with, and if I could go back and tell my younger self, I would say do 2 or 3 flips and then buy one to hold, and then do 2 or 3 flips and then buy one to hold. So you're generating that income from the flips, the big income that pays the bills and keeps the lights on, and then the buy and hold for the long-term wealth. We did that a little bit, and then eventually we focused more on flipping and didn't keep as many as we should have.
Yeah, I was just on somebody else's podcast this morning and he asked me that question. So I was curious. He's wholesaling.
Mm.
And I said, I hope you're keeping some properties and finding ways to buy and hold. And he was like, yeah, not yet. But when I do, what should that percentage be?
Mm.
And I'm curious, like if you are making, I don't know, if you're making 100,000 per flip, and my answer to him was 10%. Like at minimum 10% of your earnings should go into investing. But it sounds like from what you just said, it could be higher, like 30%.
Yeah, I think so. And I think that probably goes with the size of company you are too. When you're flipping 30, 40, 50 houses a year, you can afford to, sell half of them and keep half of them if that's what you want to do. If you're just doing 1 or 2 on the side, you have a full-time job, you're only doing 1 flip a year, 2 flips a year, then maybe it's 1 rental a year. Maybe it's not as high. But I do think, having a long-term vision, looking at things 10 years, 15, 20 years out, buying and holding rentals is way better in the long run than, the quick flips.
Well, especially if you live in an area where you can find properties that make a nice profit for flipping or for buy and hold, just nearby, I'm guessing. Or do you have properties that are further away?
Yeah, we do. Most of our stuff is in Atlanta where we are. Most of everything we buy and hold, and certainly everything we flip. We have done some short-term rentals, some resort properties. We have a place now in Siesta Key. So we've done some outside of Georgia, but most of them are around the Atlanta area. And I'm from Atlanta, so I'm partial, but I think it's one of the best major metropolitan areas where you can buy real estate. We see properties every day for $30,000, $40,000, $50,000,
Wow.
that can be rehabbed or kept as rentals. And so there's still, if you compare that to some of the other major metropolitans like Dallas or certainly San Francisco, New York, some of the other big metropolitan areas, you can't buy a house for $100,000, $200,000. They aren't there. So I think it's a great market for buying and holding in Atlanta. And, we've kind of stuck in our backyard. We know the areas. Again, I'm from here, so I kind of know all the streets and the school districts, and that's been very helpful over the years.
What would you say would be some of the risks of somebody trying to do what you do from out of state, trying to, listening to our show and say, ooh, Atlanta's a good market. I live here in California. I'm going to go start flipping from a distance in Atlanta.
Yeah. So I tell everybody, if you want to flip in your own backyard, flip in your city where if you want to buy and hold, I say partner with people who know what they're doing. So invest with other people who have the experience, have the knowledge. They're doing it again and again and again. I know a lot of people who flip in other markets other than where they live, but they built up to that. They didn't start there. So my opinion is if you want to flip houses, start in your own market where you know the area, you know the streets, you know the school districts, you know the values. You can go see the property. You can meet your contractor there. If you're wholesaling, it's a little bit different. You can do virtual wholesaling because you don't have to show up to the property. But I think when you're flipping, you want to be in your own market. And then again, if you're investing to own, you've got to have this conversation could go on for hours, right? But you got to have a good property manager. You got to have a good closing attorney or good title agent if it's a title state. There's a lot that goes into buying out of state, and that's why I say partner with someone who knows what they're doing in that state. Become an investor with them or a partner with them. And then learn how to do it so that you can do it on your own in the future.
Yeah, I couldn't agree more. I have seen people successfully do flips from out of state, but it's because they have a great team. They've got boots on the street that they guide them through it. But just trying to do it on your own, oof, it's risky. Yeah. A lot of people are saying that it's gotten harder, and it sounds like you've been doing this a while. What are your thoughts on that? Do you think it's harder to find deals? Do you think it's harder to make things cash flow today?
I think it's hard. It's harder to find deals. Yes, because there's a lot more people doing it. As an example, 7-8 years ago, when we started doing SMS texting to find off-market properties, there weren't that many people doing it. Now everybody can do it. So there's a lot more competition now than there used to be. So it does make it harder. But I think it's like any other business. It's about the people. It's about hiring and training good people, turning them loose and letting them do what they're good at. There's a lot of people that we work with who are much better at, different parts of the business than I am. and I need to hire them and train them and then move out of the way and let them do what they're good at. And so I think it's more about the people in the process. And if you have good people and you have a good process, there's always property out there, always deals to find.
Are you seeing any impact from the local economy and just the changes that we've had this year with the new administration giving you more obstacles, or same old, same old?
Yeah, definitely more obstacles. It's interesting, as long as I've been in this, you think that you're going to see some of these cycles and you're going to recognize what's happening and you're going to know what to do based on what's happening in the market. And what I've learned over the last couple of years is that we have no idea what's going to happen with the market. It's, whether it's a change in our government, or it's changing rates, or, all the things that we think could help or hurt the market over the last 10 years haven't seemed to go the way that we thought. So we certainly did see a slowdown through 2022, mid 2022. It was wide open. And I think because hedge funds were buying a lot at the time, they were paying close to retail prices for properties. They really drove up the demand. And so that's when we were, 2018 through 22 really were just wide open. And then mid 2022, yes,
as a flipper having plenty of buyers. Yeah,
that's right. Yeah, inventory in general. So that's when we were buying rental properties and just finding a lot of off-market properties. And then I think with the rising interest rates that started late 2022, that slowed things down a bit. Hedge funds quit buying like they had in the past, certainly quit paying what they were. That slowed things down. And then I think it's been a seller's market since then. So, sellers realized that their next door neighbor sold their house for, $700,000, and now they want $700,000, but their house hasn't been remodeled yet. And so it's just been a seller's market for a couple of years, and it's definitely slowed things down on the buy side. We're primarily buyers before we can sell. So it's slowed things down a lot. And I think coming into this year with the change in government and policies and all the stuff that was going on, we were very hopeful that it would have a positive impact on real estate. And I think what we found over the first 6 months is that it hasn't had a huge impact. It hasn't, if anything, the market slowed down a little bit, but the overall real estate market, it hasn't improved for us, which was surprising. Hopeful for the end of 2025, but so far it hasn't had a huge impact.
Yeah. That's what makes real estate exciting, is you just really have no idea what the future will bring. There's always a surprise, but depending on how you look at that, it could be an opportunity too.
Absolutely.
So yeah. Good stuff. All right, Brandon, any last thoughts for our audience?
I think being flexible too in real estate, one of the things that I love, and you kind of mentioned this now just a few minutes ago, one of the things that I love about real estate is there's so many different things you can do in it. You don't have to just flip houses, have to just buy and hold, have to wholesale, have to do commercial. We're developing a self-storage facility now outside of Atlanta, a big Class A 3-story self-storage facility. And, so this is the first one I've done. And so I've partnered with people who've done it a lot, and I'm learning how to do it, learning how to do the syndication, learning how to raise money from investors. So I think in real estate, if you want to, there are people who want to just do it as a side hustle, as a hobby, and you can make money doing it as a hobby. We wanted, once we learned about it and learned all the great reasons for being in real estate, how much money you can make, more importantly, the time freedom that you can have, we decided we wanted to make it a full-time business. And so being flexible and being willing to look at different avenues of real estate, there's so many that you can get involved with. I think that's one of the greatest things about real estate, is just keep your mind open. When the market changes, look for other opportunities. That's how you stay resilient for the long haul, is just look at different opportunities and be willing to change your strategy.
Yeah, look at what the situation is bringing up. Like when I started in the 2000s, early 2000s, there was a lot of new construction, and that's sort of how we got in. We would buy new construction homes and put them for rent, and they cash flowed. Then there was a foreclosure crisis. It was like, oh no, well, nobody's building homes anymore. What do we do now? Yeah. Oh, well, we buy foreclosed homes and we fix them up. We helped create that turnkey model to help our members at RealWealth. Then after that, we started syndicating like you. Land was a home, they're practically giving it away. And so I partnered with experienced developers and we syndicated as well. So there's always opportunity. You just have to look at the headlines and kind of do the opposite of what they're saying, right? Because the headlines are usually not directed towards you as an investor. They're directed, maybe to a homeowner. Like today, you see headlines saying, oh, real estate's so unaffordable. Yes, that's true. That means people are going to rent. What does that mean to you as an investor? That there's going to be more demand for rentals. So again, you got to interpret the headlines, differently than the masses. Okay, Brandon,
Yes.
well, it's really been a pleasure to have you here on the Real Wealth Show. Thank you so much for coming and joining us today.
Thank you, Kathy. I've enjoyed it. It was great learning more about what you guys are doing and hopefully added some value to your listeners. Thanks for having me.
Absolutely. Thank you. And thank you for joining us here on the Real Wealth Show. If you're wondering how you can build long-term wealth through buy and hold real estate investments, just visit us at realwealth.com/schedule. That's realwealth.com/schedule to speak with one of our experts about how to get your first rental property. It's free to join Real Wealth. And when you do, again, you get access to our investment counselors who are highly experienced in real estate and can help you out on your journey. I'm Kathy Fettke. Thanks for joining me here on The Real Wealth Show, and we'll see you next time.
Views and opinions expressed in this podcast are provided for informational purposes only and should not be construed as an offer to buy or sell any securities or to make or consider any investment or course of action. For more information, go to realwealthshow.com.